Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, 11th day of December, 2014, and this is the daily report for gold and silver. Mixed bag in the precious metals markets, light volume, light trading. We are currently lower on gold, unchanged to slightly higher on silver. First to gold, 1224.57, right around there, current print. Puts it off roughly $1 on the day. The high is 12.34, the low is 12.16.40, and as I said, currently down about $1. But the key is that our current different levels of resistance, we've just gone under a level which was sitting at around 12.25. More on that in a little bit. First to silver. Higher today, only nominally higher, up a penny to 2 pennies. Looking at a daily chart, you can see this pure doji here. That's showing an unchanged market. But considering the fact that we had a dramatic move in the market a few days ago, let's go ahead and update this chart. A dramatic move in the market a few days ago. We have got this very, very consolidating market now. The real question is, we've seen this before where it builds a base and then jumps off of that. Is that something we're going to see again? We'll talk about that towards the end of the show. So the real question that we need to ask ourselves as we get closer and closer to the conclusion of 2014, we're in a holiday season, is are we witnessing, since the market has hit this bottom at 1131, a real pivot point or key reversal? We've had a $100 rally from that move, or is it simply a counter trend and a counter trend to this protracted long bearish sentiment that we've had through the year? My short answer to that is that we are at a critical point in which we will soon be able to determine that, but right now we are just at the crossroads and we need to see what side of the track it lands on, so to speak. And here's what I'm talking about. When we look at a very, very short-term chart, this is a 720 or a half-a-day chart. We've got a couple of different fib retracement areas in here, one from 1322 and another one from 1254. 1254 to me is that key area or key element that we need to see breached in terms of having concrete technical confirmation, because then what we have been witnessing is a series of, we had this new low, we've had a series of higher lows here and here. On a short-term basis, of course, during this rally, of course, we've had series of higher highs, but we have stalled, and we have stalled with an intraday high of 1241. I'll show you why that's an important number in a second. But without taking that particular high out, and the high that I'm talking about is 1254, we haven't gotten the second piece of the puzzle, meaning higher highs as we're starting to see higher lows. The other thing is we really need to take a look at some key levels of support and resistance, and to do that we'll pull up a daily chart. So traders have done just that. This is a daily chart, continuous contract COMEX silver. There is that one fib retracement that we have been talking about. This is from the high 1346. You can see it here. This is after the market just had a fairly dramatic rise. From there we hit this high. If we take a look at the range, meaning 1346 to approximately 1130, 1129 on this, and then we look at the retracement, meaning the correction, we've come up right to a high of about 1237.90, so let's call that 1238, and this is where I'm pegging key resistance at, right in this point. Of course, as I said, we would not only need to take that out, but we would need follow through to take this high out. This is that high at 1254. That to me would put some real technical evidence into the assumption or the model that says we've seen a bottom here at 1131 and we have witnessed a key reversal. Anything other than that could still be construed as basically a counter trend, and to do that I need to pull up a longer term chart to show you what I'm talking about. Now, I've pulled up our weekly chart. We've used this chart on many occasions, and most recently where we were using this chart was to illustrate this compression triangle that we saw developing as we had these series of lower highs And then when we drew our support line off of these lows, we noticed that it was in fact coming to an apex. Now, we genuinely got a break below that. That break took us to new lows. This is the 1131. But in essence, what I'm looking at is what these text commentaries say. And that is we're right at this critical point, because really, if we extend this downward long-standing resistance line like this, you'll notice that these most recent highs have taken us right to that line, but have appeared, at least on a tentative basis, to have backed off. And that's why my current belief is as follows. A failure to break above this trend line, to me, confirms that the rally we have been witnessing, this $100 rally here, was simply a counter trend to the predominant bearish trend. There's no doubt. At the same time, if we see a break above this, that could confirm that the current rally is really more than a counter trend, and it could develop into something else. That is, on a technical basis, what I'm looking at, and that's also why I think that we're at a pretty critical point in terms of gold pricing and the technicals that we look at, specifically our fib retracements and long-standing trend lines. So traders, what about silver? You know, we've got the market holding steady just above $17. We've talked about some key elements in silver that are fairly unique. And first of all, today, as we see gold trading slightly lower, silver trading higher, that is in light of a recurring strong stock market. Of course, it sold off fairly hard yesterday, but today it closed up very, very strong. Dollar also trading up about 0.62 points. It's now at 88.62 off of an opening of 88 even. When I look at silver, really what I see is as follows. When we look at this bottom here, this is the bottom that came in roughly at $14. We certainly saw some real significant support come into the market, propped it back up. In terms of long-standing support, it's got to be down there. Now, the next particular point I draw your attention to are these series of bottoms here right before the market fell, and that's very, very supportive, just below $19 an ounce. Also a 23% retracement, and it's a retracement from this last recent fall of $35 down to $14. So my sense is right now we don't have any very, very strong resistance, real strong resistance, till just around 1900. In terms of a secondary point, you've got to go to the bottoms right in here and draw that across. I'll do that as best I can to put in a straight line. And you can see that we are pretty much there. I've drawn it purposely a little bit above so we could see where it comes in terms of our current market price. And so we're certainly right at this particular area in terms of the highs that we're at, right at around 17. Those match up quite eloquently to this period here. So there's no doubt we have some first level of resistance right at 17, major resistance at 1889. Currently, we have no open trades. I'm waiting for some sort of confirmation of a real direction in the market. I simply don't want us right before the holiday season to get caught in any kind of whipsaw scenario due to very, very light volume, increased sensitivity. Most importantly, we trade when we have defined trades to implement. And my sense is sometimes the best decision we can make is to simply sideline the markets and wait for some clarity to re-enter our technicals as well as fundamentals in the market. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up. Bye-bye.